Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to the AJ Brown Show. A little delayed on the start, apologies. Good morning, AJ, episode 138, June 21st, triple witching. I just learned about that this morning. Quadruple witching, wow. Maybe we should cover at some point what that actually means, because there's some variety to that. Happy Friday. How are you doing? How's the markets? I feel like it's a pretty calm week. What do you think?
It is a calm week. It's a calm week with a holiday right in the middle. Usually holidays are at the end or at the beginning. So having one right in the Wednesday kind of cutting up. It's interesting. Investors went into the market on Monday and Tuesday with a certain sentiment. And then they came back into the market on Thursday and Friday today with a whole different sentiment. So something happened on that Wednesday that caused people to flip perspectives.
And would it be the retail numbers? Was it some of the rhetoric? Because I know I saw a couple notes this morning, but nothing crazy one way or the other.
No, and I think it's a moment of no news creates heightened reactions to small tidbits of news. I mean, the retail report, it showed things were cooling off. Right? It showed things had been moderating, which gave investors a little bit of confidence, right? Because the Fed presidents and the Fed rhetoric is that, hey, we're going to stay the long game, keep interest rates high as long as we have to in order to moderate inflation. In fact, one of the Fed presidents just went as far as saying, hey, it's going to take until 2026 to get to our targets. So their message is slow and steady, no, extreme rate hikes in the future. But at the same time, investors look at the retail sales numbers, they get some confidence. So even though the Fed is saying maybe one rate hike this year, well, investors have already priced in 2 rate hikes this year.
Rate hike or rate cut?
Rate cut. We're talking rate cuts. So 2 rate cuts this year, one probably in September and one in December. That's what the market has priced in. So, I mean, we'll have to see how that plays out. But besides like rhetoric, which in my mind, kind of people categorize that as hearsay, like rumor. Besides the rhetoric, I mean, there hasn't been anything to really sink our teeth in. And so I think that people are looking at, overbought versus oversold. Some people are kicking in on some of those leading indicators. We had Jeff, our guest star from last week, do a fantastic presentation for us on Wednesday. And he was talking a lot about leading versus lagging indicators on how to use them for timing the markets. And so, I think a lot of people are looking at these leading indicators, flipping. And so, I think there's some profit taking. I'm not sure if we can call this a full-on reversal yet. I mean, I'm seeing bar patterns that are hinting at reversal SIP, but I'm not seeing our lagging indicators validating that. And I usually like to have my lagging indicators be my primary indicator. And I usually like to have things like bar patterns and leading indicators be kind of a validating or confidence building to signals of reversal. So we'll see how it plays out.
Yeah, I'm going to go ahead and pull up your screen, and I think you have the S&P on there to kind of reference what you're talking about, in that the overall market, or the S&P 500, continues to step up and pull back a little bit, but overall the trend is going up. And my question to you is this still being led by those handful of companies that are just crushing it? And it's like, I mean, if we look at Nvidia, they just split last week and the stock is up like another $20 on top of that split.
Yeah, although in the beginning of the week, I have to say that Nvidia kind of had a little bit of a pullback whereas a lot of the other tech companies like Alphabet, aka Google, and Meta, aka Facebook, some of those other big players, Microsoft, did take a lead, and Nvidia took a little bit of pullback. But since then, Nvidia has been getting more investment dollars, as we thought that they would. Here is kind of my retracement analysis picture on the markets up to last night. We have an active bar today, which is so far it's a doji bar, which means where the market opened is where the market is closing. Yeah, it shows that we're on this gain, but our biggest high was on Tuesday. Our highest close was on Tuesday, I should say. And yeah, let me do one thing here. I'm going to take my indicator. This is one of our free indicators, SIP, and I'm going to actually turn on the average line crossing to actually see what those lines look like, to see if we're anywhere close to seeing a crossing. Let's see if I can do that again. Hold on one second. I might not have clicked the button correctly. Here we go. Show average lines, show study. There we go. Click OK, click apply, click OK. There they are. So, we would not get a signal. Let me zoom in here. We would not get a signal that a top had been found until this light blue line that you see right here crosses down below this red line. And although the light blue line has flattened out and the red line still goes up, meaning that a crossing might happen as early as Monday or Tuesday, it would take more sell-off for that to happen. And so far, this bar that we're seeing today, and we can look at it intraday, but generally what this kind of bar means is that in the morning, investors were selling off, probably going on with the momentum from the previous day. But then so far, the investors has started to buy back. In fact, they're higher than where we started. Let's actually see if I'm right by taking a look at an intraday chart and see what's actually happened today, because this is the days like this are all telling. So I'm going to go ahead and detach and get myself a new chart.
And does the quadruple witching have a little bit to do with that? Because I did hear some of the Bloomberg commentators this morning talking about historically there's been some spikes and some volatility and volume on those days specifically versus like any other Friday.
Yeah. Well, okay, so let's make sure we define what quadruple or triple witching is. This is where it happens 4 times a year, and it is when not only do options expire, right? Because options expire on the 3rd Friday of every month, but it's also where index options expire and single stock futures expire and index futures expire. So all of these derivatives expire today. And it happens also in March, it happens in September, and it happens in December. And so what does that mean? Derivatives, if you think about them, like our option contracts, but also future contracts, are all agreements for the transaction of stocks, indexes, ETFs on a certain day. So today's the day where all of a sudden, all of these contracts that have been traded in other markets are now actually turning into transactions in this market. And so, yeah, it creates a lot of volatility because decisions that were made months ago are finally coming into fruition today. So you're seeing a lot of stuff that has nothing to do with the current market dynamics. It was all decisions made months ago happening today. So it kind of throws things off. It especially throws off volume. So if you're using volume, whether you're using volume itself as a standalone variable in your, for instance, validation process, or if you're using volume that has been put into indicators. And a lot of people don't even know when volume is thrown into indicators, but or considered part of the math equation that calculates the indicator. But some of those would be accumulation distribution type measurements, on balance volume, the Shaken oscillator. All of those have a factor of volume in there. So on quadruple witching, even on the third Friday of every month when options expire, you get a big kind of tick up in volume that is not from the normal buying and selling process of the day. And that throws especially technical analysis traders off, especially beginning technical analysis traders who are trusting indicators wholeheartedly without knowing what goes into the calculation of that indicator. So they're making trade signals based on the Shaken oscillator, but the Shaken oscillator is going to be completely off keel, and because most Shaken oscillators are based on 10 days and 3 days, it's going to be off keel for the next 2 trading weeks, right? 10 days. So that's something to keep into consideration.
I do have a quick question follow up to that, and that is because certain contracts expire today, like across all these different multi classes, are these owners of the contracts trying to exit those positions before they expire? Like, does that have a little bit to do with why there might be more volume than not?
Yeah. So in addition to the actual, the volume that we would see starting on Monday because of the actual expiration of the contracts, what you're seeing is a whole bunch of traders trying to go ahead and close out their positions before the actual expiration happens. Usually when you're so close to either the future or the option strike price, the traders want to be sure one way or another. They don't want to be surprised with a transaction happening after hours that they didn't price in. So they'd rather close their position manually and mechanically a day or two before expiration just to get it settled, right? It's better to settle it on your terms, especially if there's any sort of confusion. Like if you're pretty far out or in the money and you've already figured out what's going to happen, then you let it go. But if you're right at that threshold where you don't know if it's going to go one way or another, a lot of times traders will go ahead and close out that position. So that also accounts for that. Now I've got our daily chart up here. And so just like I had thought, if you take a look at just today's, these are 15-minute bars, and this dotted line you're seeing that I'm highlighting right now is the beginning of the day. So in the first 30 minutes of trading, I call that the open range, we had a lot of sell-off, probably momentum from yesterday. But then since then, you can see that there's been a couple of 15-minute bars there that are pretty strong in buying. Couple of traders then, as soon as that accumulation occurs, starts to sell off a little bit, but then there's this huge tranche of buying. So we'll see how the rest of today plays out, whether or not it supports more selling like we saw yesterday. Yesterday was a pretty significant sell-off day. Or if it's, this was a sell-off day, basically profit taking, and now people are going ahead and buying. It's a little too soon in the day to find that out.
Yeah, and one of the tools that we use here at Trading Trainer is options, the option investing tool. And so we'll go through a few examples, but I do want to ask you, and I believe we've mentioned this a handful of times, but as the market hits these highs and it starts to stall out, options are a great tool to use as an investment vehicle because of the time component, right?
Yeah.
In that, right? And so given where we are, June 21st, the start of summer, how can options through the rest of the summer help any of our investors or viewers or people new to the channel? And then we'll go over through some examples through the rest of the show.
Well, in summary, right, if a position stalls for like 2 or 3 months, as positions tend to do during the summer doldrums, what we can do is sell some options, collect a percentage point or two, or in the case of what we do here at Trading Trainer, as much as double-digit returns. And then once we've sold that premium, it's like watching the clock time out, right? Those premiums wind up acting like the coupons that stores send you through the mail. Or more accurately, have you ever had one of those, like a Boy Scout or a Girl Scout or one of those scouts come to your door and sell you a book of coupons? And they usually charge you 10, 15 bucks for this book of coupons. And the scoop is you have to use those coupons before an expiration date. You know, many times people buy those books of coupons and then never use them. And guess who gets to benefit? The stores and the scouting group who collected that money from you, and then you never used the coupon. And that's basically the whole premise behind selling this option premium, is that we sell it at a set point that makes it not even worthwhile for the person who bought it from us to want to use it. And so we wind up getting to collect that premium, the amount that, you charge for the coupon, and then the coupon doesn't get used. So that's something that works perfectly when the stock goes sideways, right? And so otherwise, you'd wait the whole summer and the stock wouldn't move up or down. There would be no asset appreciation. You'd be making 0% on your money. Whereas what we're doing is we're making that money work for us. We're basically selling the option, timing it so that it expires worthless, and making a percentage off of it. And then, of course, the worst case scenario is, what if they do decide to exercise us out of that stock? We usually set it so that if they do that, we wind up with a nice little profit. So either way is a good situation.
Yeah, and that's one of the lessons that is taught at Trading Trainer. And I do want to give everyone an opportunity to learn a little bit more. So AJ's got an awesome daily workshop that he's put together where he breaks down 4 of these strategies that function like these coupons, like these dividend payments. The whole idea behind this is to lower your risk, be able to sleep at night, add a little flexibility to your portfolio, and just being more engaged in being an investor, an active investor. And the market might not always continue to hit new highs, right, AJ? I mean, you've been in the game for quite some time. And so when that reverse happens, because it will at some point, you just want to be prepared, and options are a great tool to do that.
Yeah.
So we're going to go ahead and take a break, and then we are streaming live, everyone. So 2 things, show us some love, hit that like, hit that follow, hit that subscribe button. And then if you have any questions for AJ specifically in terms of any names, anything that maybe you talked about on the webinar this week, feel free to throw it in the chat. We're going to take a break. We'll be right back. Sit tight.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ, before we go into your pick of the week, I do want to get your perspective on NVIDIA, just because it's the talk of the town, and we had that 10-for-1 split, which is always interesting, and it seems as the party just kept on going.
Yeah. It's funny. NVIDIA is, I remember hearing on Monday, before this Wednesday holiday, we had that Wednesday holiday that is quite unusual. Usually our holidays are either at the beginning or the end of the week. So having a holiday in the middle of the week kind of bifurcates the trading week into 2 separate trading weeks. But on Monday, it seemed like NVIDIA had topped out. A lot of the other tech stocks were taking over. Last week, it was all about NVIDIA and some of the large caps pushing the market. This week, you see that the mid caps and the small caps are trudging right along with the large caps. But then, as the week went on, NVIDIA took over again. People are buying NVIDIA. There was the 10-for-1 split. So now it's quite affordable, right? It was trading up at like $1,200, almost $1,300. And now it's at $128. And so people who otherwise wouldn't be able to afford shares of NVIDIA can now jump in. It's a good thing. Um, is it too late to get in? I'm not sure about that. As far as I am concerned, if I'm adding to my position, I'm doing it by selling put options. That's my favorite way to buy stock. You buy it at a discount, and at the same time, if the transaction doesn't go through, then you wind up getting to collect a premium there too. You'll notice there's a theme in the way I trade, and that is every time I turn around, I look how to create a, hopefully double digit premium. And so even placing orders, I try to collect a premium at the same time.
Yeah, because those percentages add up over many, many years, many, many trades.
Absolutely.
And
Consistency is key. Discipline is key.
and NVIDIA is like an amazing example of the power of capitalism, technology. Because I keep seeing these articles where if someone had invested $10,000, well, let me just ask you, what do you think someone 10 years ago investing in NVIDIA's IPO, what that portfolio stands at now?
Well, it's funny you should say that because that's exactly what my wife had done. My wife got a tip to purchase, I forgot how many, maybe 25 shares of NVIDIA, and she did. And I think she's up, I want to say 100 to 1, right? I think that she has, just by holding that position and doing a couple of ads, I think she's got something like 300 shares now after this 10 to 1 split. And I mean, it has exploded her portfolio from a small $10,000 investment to something over, I think it's over $200,000. So
Yeah, and there's a few examples of like Teslas are getting so we're always on the lookout for these things. But the article I keep seeing is 10,000 10 years ago at the IPO is over $2 million, $2.2 million.
yep, yep.
Um, the good thing is the prices back down to levels where some of our strategies we can start to look at it a little bit more, because it was getting a little tough when it was up there at what, $1,300.
Yeah, you'd need to have a very large portfolio for sure.
All right. So moving on from a very exciting, thrilling name to something that's a little bit more, I don't know. I don't like to use the word boring. We might need a cooler word than boring, but more consistent brand, more consistent name, more consistent business. And so let's go ahead and go through your pick of the week. I think we may have reviewed this not too long ago,
Yep,
but you're still liking it, and that's uh, Heinz, Kraft Heinz,
yep.
ticker symbol KHC. Kraft Heinz, AJ's pick of the week. What are we looking at? What are we liking?
Well, I like this even more, and I want to tell you why. So we were talking about a signal, right? This is about 3 weeks ago. And, there was follow through the subsequent day. And I know a lot of folks, including me, got in and then we got stopped out. But I'm back here to say that this bottom that we just found, we're waiting for the follow through day. But, I'm going to take all that money that we got stopped out at and I'm going to purchase at this lower price. And if you didn't get in back then, if you missed your opportunity, look for that follow through day. We're going to be buying into Kraft Heinz Corp at this extra low, and then looking to sell the premium. So that's why I'm featuring it again 3 weeks ago. I know that folks think that they got burned on Kraft Heinz. I'm telling you that you should double down, that this is, a good position to be following and getting in too long. But again, we want to wait for that follow through day. I don't think it definitely wasn't yesterday. I think we want to see about possibly today or Monday or sometime this week before we get that reversal signal. So, don't shoot till you see the whites of their eyes, but I'm actually happier that it recalibrated down a couple dollars.
And that happens sometimes, right? Like that's why you have your risk reward parameters, and you're not ashamed or afraid to come on here on the live
No.
stream and talk about it, because you're confident enough to get back in the trade, not only because of some of the technicals, but because of maybe a little bit of the basis of the company, right? Like they're
Yep.
not some exotic, crazy tech company, biotech. So the pullback may have been overextended.
Yep.
And then to the upside, would you want to potentially hold it longer than you might because it did fall through your initial support here, or are you going to stick to the same type of return exit strategy?
You know what I'm going to be doing is I'm going to be looking at where the next reversal happens. I wouldn't be surprised if instead of coming up to 38.50, which is what I originally had forecasted, that it stops around here at maybe $36.25. And so I could recalibrate my drawing here, but I don't want to do that until I actually get my top signal. But I'd be happy, especially if I get down here, get into the position at 32.50, 32.75. I'd be happy if it went up and stopped at 36 bucks. If it goes up to 38 and a half bucks, that's great too. I'm going to play it by the signals. And just so everybody's on the same page as me, if I do keep going up, if Kraft has one of those moments and it hits above 40, I'm going to not worry about premium selling. I'm just going to take my profit and run. I know I'm looking a little bit into the future, but if my signal occurs above 40, take my profits and run. But if my signal occurs anywhere between 36 all the way up to 40, then I'm going to sell some premium, turn this Kraft into a nice premium trade for myself.
And one final question, follow up to this: what kind of time frame are you looking at? 3 weeks, 4 weeks, a month? Like, do you think that's enough time for it to swing back up to that midpoint level?
Yeah, absolutely. So once I get my confirming position in place, a good 3 to 4 weeks would probably get us right back up to where we expect to be, even during the summer months, right? This is, like you said, not necessarily a boring, but it's a consistent symbol. It consistently gives dividends. It consistently is a company that makes money. It's a sure bet. But the reason why, I'm forecasting out there, but if we start to see a pullback in the broad market, a lot of investors then look for the sure thing, and that's what drives a Kraft up. So like I said, if we start to go up, people are in the summer doldrums, they're bored, they're taking their money out of more riskier plays and putting it into a Kraft Heinz. If we see that price go higher than 40, we're just going to ride that wave and take our profits when it tops out. So we'll see.
They actually have a really good commercial running right now, and it's rare for me to remember commercials, but it's pretty unique because it's like a girl at a restaurant, and he brings her like the fancy ketchup, and she's like, "Well, I'm part of the Heinz family, so I would like Heinz ketchup, please." And the guy like runs back, he's like, "Do we have Heinz? Do we have Heinz?" And then like someone sees her doing it, and he's like, "Oh, I'm also part of the Heinz family." So I was like, "Okay, well." They got a little bit, I'm sure they have a great budget to do creative things like that, but it's great to see. And then the other thing I was thinking was summer more
Grilling season.
summer, more baseball games, more ketchup, more hot dogs, right? But like you said, they do have a larger portfolio. So
Absolutely.
we'll keep Kraft Heinz on the watch list. When it comes back around our way, maybe we could review it again and talk about how we navigated that trade.
Yeah.
So that's AJ's pick of the week. All right, we've got a couple very interesting names in our speed round. Unless AJ, you have anything else that you want us to run through before that?
No, let's go ahead and do that. I have some thoughts in closing, but for now, let's keep on tickers.
All right, let's go to our first pick of the week in our speed round. This is Pamela from Reno, Nevada, interested in, I believe this is a retailer, Children's Place, ticker symbol PLCE.
This is also one that we featured a couple of weeks ago, and we actually talked about shorting Children's Place. And we got our signal and we got our follow through to short it. And so that's up here at like the $14 zone. Well, we're trading down here at about $7, and it looks like we're getting the bar pattern for a reversal up. Let me explain something to you folks out there, because I know you guys are more comfortable with selling call premium, and you may be unsure about selling put premium, which is what we would be doing here. So if you think about what a put contract is, a put contract is an agreement between two parties where the party who buys the put contract now has the right to put their stock to the person who sold them that option. So it's opposite the call, right? If I sell you, SIP, a call option, you have the right to call me out of the stock, to take my stock and give me that strike price. For the put option, when I sell you that put option, you have the right to sell me your stock at that price. So I need to make sure, like for instance, in this case, if we sell the put option, let's see if there's a $7.50 strike price. I think there is. So I'm pulling up the options here. We'll look at July, since today is options expiration day. They're trading every dollar. So say I sell you the $7 option. The $7 option is currently going for, it looks like about 45 cents. So say I sell you this put option for 45 cents, 47 and a half cents, as we're seeing 50 cents, as we're seeing it go right here. What you're doing is you're paying for the right to sell me the stock at $7. I have to have $7 per share, or $700 per contract, to buy that from you. My broker is going to make sure I have the cash on hand. So what we often talk about is the initial covering position. What allows me to sell that put premium in the future? So by shorting the stock, right? If I shorted the stock up here, even at $12, so say for instance, I received $12. Shorting the stock means I borrow shares of this company from my broker, and then I sell it, and I sell it for $12. That means I've got $12 cash per share in hand. And I have some, agreement with my broker. He wants that stock back at some point, right? He may be charging me interest, or there may be, depending on my agreement with the broker, there may be, something that I owe him, or he just wants the stock back. I have an obligation to the broker at some point to return those shares of stock. But in the meantime, I have an IOU with the broker. I owe you, let's say, 100 shares of the stock. I took those 100 shares of stock. I sold them for $12 a share, or $1,200. Now I'm going to sell that put to you for 70 cents, 50 cents. It was going all over the place. 45 cents, let's say 50 cents per share. So that means I'm selling it to you for about $50 for a contract. And I have that $7 set aside, that $7 of that $12 that I made set aside for just in case you come knocking on my door and say, hey, I do want to sell you that stock for $7. If you do that and you sell me the stock, I give up $7, right? That means of that original 12, I'm going to keep 5. I give 7 to you. You give me that stock, and then guess what? I can use that stock to fulfill my IOU to the broker. So that's why shorting a stock is a covering position. It gives me the cash that my broker looks like I need to have. And if that transaction goes through, you've set me up to match my obligation to the broker. I hope that makes sense, but that's how that works, right? So shorting a stock is a perfect covering position for selling that put premium. So we're waiting for the signal. We're waiting for the light blue arrow. But if we get that light blue arrow, I think that's why Pamela is bringing this up, because if she shorted this, yes, you're absolutely right, Pamela, we should be looking at selling that put premium as soon as we get the signal and setting up that trade, right? you're going to make $50. Again, if you shorted this thing for $1,200 and then you make $50, you've already reduced your cost basis to $1,150. Plus, you've gone ahead and built in a $500 profit in addition to that. I mean, you can't get better than that. That's a great trade. And so we'll look for that signal. Don't do it until you see the signal, but we're set to go.
Yeah, and we've been putting the link to the indicator in the scroll bar, and it's in the chat. But this is a great example of acting on this awesome free trading trainer indicator, because even just the last signal here, I mean, that's from 15 down to like 7.5, which is a pretty darn good return. And this is a very well-priced stock, right? 7 to 15 to 20 to 25. That's kind of like the sweet spot for a lot of these option strategies. So
totally affordable.
So thanks for bringing this one up, Pamela. I'm definitely going to put this one on my watch list, and we'll keep an eye on it. All right, moving to our next name. This is Lonnie from Austin, Texas, interested in Behemoth Cisco, ticker symbol SC or CSCO, Cisco.
Cisco has been a fantastic stock over the years to sell premium against, because it's almost like a Kraft Heinz at this point. I know a lot of people think of Cisco as like a tech company, but Cisco got very, very popular when I was still working at Hewlett Packard. So we're talking 20, 25 years ago, because they were really building out the backbone of the internet. Well, at this point, the most of the backbone of the internet has been built, right? If anything, it's now all about upgrading stuff, right? There's enough routers in place. Who knows? Maybe the AI boom might need to, do a step function increase, but the internet has been built out. So Cisco is now no longer one of those cutting edge technology companies. They're one of those staples, like a Kraft Heinz Corp. So you could see I'm basically looking at the last couple of years of Cisco, and they've been trading basically sideways choppy, which is exactly what we want. We want strong companies that make profit, that aren't going to go anywhere tomorrow. They even give a little bit of dividend to their shareholders, which means the shareholders don't care so much whether or not the company increases its stock price, because they're making a quarterly dividend. So they're getting paid differently. And these are the type of companies we love to sell premium against. So now let me zoom back into more current. And I see that a bottom has been found, and it looks like either on Tuesday or Thursday, we would have gotten follow through. I'm not sure if we're a little bit too late. I personally, with Cisco, would want to have Cisco in my portfolio for the long term. In other words, if I'm going to be buying some stock, I'm going to be setting up a premium trade. I think I want to buy the stock in order to get into this trade. So one of the cool ways to do that, of course, is to sell puts. So why not sell some $45 puts? Again, what's the obligation? If I sell you puts, you have the right to sell me your stock. And if I set the strike price at 45, then I'm willing to pay $45 a share. Now, given that the stock is trading currently at $47.50, if you sell it to me at $45, I've already got $2.50 worth of profit built in. So I might start setting out and looking to buy some stock at this $45 point. And, you get paid. Let's see how much people are paying you right now to do that $45. So if you agree today to purchase stock at $45, despite it currently selling at almost $47.50. If you say, hey, I agree to pay you $45, then right now, per contract, you'd get $20. I mean, $20 is $20. And if nobody decides to sell you that stock for $45, well, then you just made $20, right? And you could do that for as many contracts as you want. Just be prepared that if you are saying, I will pay $45 a share, make sure you're willing to pay $45 a share. You have that money willing to go. But I would want to get into Cisco because I think holding Cisco for the long term is a great idea. I like the idea that you collect premiums on that. I love the idea that you can sell call premium once you have the stock in your portfolio. So I like everything about this. I just think that you currently have missed the opportunity. It's a little bit higher in the price now. Let's either start writing some of those cash secured puts or wait for it to dip back down and get in at that low price again.
It sounds like that's a good strategy for if you missed a certain move, that you can still get a little bit of return out of it using options. So yeah, Cisco's kind of one of those weird tech companies where nobody really knows what they do, but everyone knows what the company is.
They're behind the scenes for sure.
We'll keep an eye on that. Lonnie, thank you for bringing that one. All right, our third and final pick, our speed round pick, is a name that we've talked about a lot on the show. This is Priya from Los Angeles, California, interested in Carvana, ticker symbol CVNA. Very interesting company. Very, a lot of stock moves here. A lot of price movement.
Well, here's the scoop, folks. I'm eating crow on this one. If you go back about 100, not 100, maybe 50 or so episodes, I had written Carvana off for good, right? I had basically said this company was a flash in the pan during the pandemic. They were trading down here, almost a penny stock. They were trading at the $5 mark. That was about a year, maybe 18 months ago. And we were on this show, and I said it was a great idea during the pandemic. People are done with the pandemic. They're going out. They're buying cars. I'm wrong. They recreated themselves. They totally, during this time when, investors gave up on them, they restructured their company. They tightened up. They went with their technology. They got rid of the fat that they had accumulated during the pandemic. And you know what, Sip, I went ahead. We've been talking about electric cars this past week. I mean, these past weeks, we've been talking about the Fisker. We've been talking about Rivian, Tesla a lot. This past week, on the Juneteenth holiday, there was no trading session. There was nothing going on. I went down the street and I bought one of those F-150 Lightnings. I've never owned a pickup in my life, but now I've got one of these electric pickup trucks. And the reason why I bring that up is not because we could talk about my electric pickup truck later, but they didn't want to buy my Mercedes, my trade-in. But what they did do is they put it on Carvana. So now all the dealerships are using Carvana instead of taking inventory of trade. If they don't want to buy your trade-in, they'll go and default to Carvana. Carvana gives them an affiliate fee. I was talking to them at depth because I was asking all sorts of questions, and I was speaking the language of the guy behind the finance counter. In fact, I'm born and raised in this area of Washington, D.C. I took 25 years living away, but then I moved back to take care of my parents. And the scoop is the dude walked by, and I remember him from television commercials when I was a teenager. He was a little kid, and I'm like, and he's, of course, he's shaking hands with all the people, and I'm like, I know who you are. You're the son. He's like, oh my God, you saw those commercials. It was Ted Britt Ford's son, right? I'm like, I know who you are. You're kind of like royal. He's like, if I was royalty, I wouldn't be in this car dealership today, but thank you so much. He's like, those commercials were so awkward. I'm like, I guess for a 7-year-old, but now you're like 37 and I'm like 51, but it's all cool. But yeah, they're using Carvana, and Carvana pays them a $50 finder's fee or affiliate fee. And so dealerships they've restructured their business in a good way. If you notice, they actually are doing pretty well at showing profits. I wouldn't be surprised if they don't start giving investors dividends in the next couple of years. But to go from 18 months ago at a $5 stock price to be trading between 100 and 120, I mean, that's pretty cool. So I'm eating crow. I got egg on my face, but I think that this company has reinvented themselves in a good way. So let's talk about Priya in Los Angeles, about what we can trade. Priya, I don't know. Every time they have an earnings, they impress their investors and they cause more investors to jump in. So maybe you're looking to wonder if this might be a good stock to own in your portfolio for the long term. Maybe this is the next, NVIDIA play, although I don't think you can recreate the NVIDIA, technology sector or something like that. But in the car world, I think that Carvana has figured some stuff out. I would do the same thing we've been talking about. If you want to acquire some of this stock and you're willing to pay, for instance, the $100, let me look at the option chain here. And I'm kicking myself that I was telling people 18 months ago to write this company off. If you would have purchased this stock when we were talking about it 18 months ago at the $5 price, you'd have over a 25 to 1 win ratio right now, a return. That's 2,500%. But anyway, if you're willing to pay $100 a share, you could easily right now get $3.35 a share in order to lock in that buy price. And, you'd pretty much be getting it at a discount. If you wanted to pay $95, they're still offering $2.10 a share. And that way you only have to put $95 up to buy a share of this stuff. So that's the strategy I would use. I wouldn't try to sell premium against this per se. It looks like it's a little bit of a growing company, but owning the stock and buying those stock shares at a discount, that would be my strategy.
Yeah, I might have to go look a little bit more into how they were able to pull this off, because it is a phenomenal return. And you're right, we talked about it a while ago, and we thought that it just shows that a company can turn around rather quickly, right? 18 months, if they, pivot.
We totally grouped this with like a Peloton, right? All those companies that did really well when people were stuck inside and then started to do bad once people were allowed to come outside again. But Carvana, they must have some good. I'm with you. I don't know their backstory, but I'd love if there was a documentary on Carvana to figure out what the heck happened and why they're doing so well now.
So we'll need a photo of you in front of the pickup truck this week. We'll post it on the socials.
Okay.
I'd love to see, because we got you rolling in this Tesla commercial. Now we gotta beef it up with the Ford Light. What is it? A Lightning?
It's an F-150 Lightning Platinum Edition.
What color?
White.
Okay.
White with two-tone interior.
So you got a lot of room to move things.
Well, yeah, and it's a crew cab, so it's like a limo on the inside.
Oh, my construction buddies would definitely love that, because they like the big bodies, and because they got to pile a lot of stuff in there.
Yeah.
All right. Thank you for that, Priya. Carvana, we'll keep an eye on that. That wraps up our speed round. And I know, AJ, you had some final thoughts that you wanted to run through.
Well, my final thought is I made this little tool, and we can talk about it at depth at another show, but I wanted to show people kind of, you always hear folks who are like, back in the day when I was young, you could buy candy for a penny, stuff like that. This shows the people always think about this inflation rate as a fixed number, this 2% target of the Feds. But really, it's a rate. It's how fast we're growing. So I made this little tool, and there's that 2% target, and this basically says if something costs $100 today, in 30 years, if we have a 2% average inflation over that time, 2% per year, in 30 years, it's going to cost $180. But, our inflation rate, especially during the end, as the pandemic was rolling out, was close to 6%. And you can see, because this is a rate, if something cost $100 today, in 30 years, that would cost $575, right? So, you start to see what this all means when inflation is out of control. Even now, with our inflation rate having a hard time getting below 3%, the difference between 3% and 2% is significant over the long term, right? If it's at 3%, then something that costs $100 right now will cost $250 roughly at the end of 30 years, whereas at 2%, it's only 180. I mean, that's a big difference over a 30-year period. That's like the period that most people have a mortgage on their house. So keep that in mind when you're thinking about these inflation numbers. Some people are like, the Fed should start loosening up now, even though it's somewhere, 3.5%. But even 3.5%, we're talking 280 versus 180. That's a big deal. So, letting the Fed do their thing, getting it down to 2%, will save a lot of our pocketbooks big time over even just the next few years.
It's like, this is the prime example of greed, right? When are there instances when we have negative inflation? Because negative inflation, in theory, would help level these numbers out over 30 years. And that means we need some bad news. We need some things to go against us, and that's hard to accept as a civilized economy. But that's just the reality when you look at it over time, right?
And maybe we'll find some graphs that have like a linear regression line that balance out all the short-term interest rate changes over time and kind of tell us what the number has been. But, even we talk about how the S&P on average is something like, 5%? I mean, you put $100 in, and in 30 years, you have $432. So, we'll look at that. We'll look at some different examples, maybe in some future shows.
For sure. Awesome tool. We'll probably build on it in the future, because I know you and the team are working really hard at some awesome indicators, which once again, if you haven't gone to the link that we shared, jump on over there. Really cool stuff in the works. AI tools, programming software, everything's becoming so fluid, and AJ and the team are taking these strategies that they've been working on for past 20 years, and they're pumping it into these tools, and they're making it available to you. So head on over there, sign up, become one of the crew, start to get those signals on your screen, follow along, and ask some questions along the way if you're not sure of what to do next. As always, you can leave a comment, you can send us a DM, and show a little bit of love. Hit that like, hit that follow, hit that subscribe button. We are heading into the middle of the summer here. Things are starting to slow down, but that's a great time to use options and become a premium seller.
Absolutely.
So without the excitement, AJ and the team always have something cooking, and we appreciate you tuning in and following along and seeing what we got in the works. So AJ, without, do you have any final words?
I have none. I'm just chugging along.
All right. Well, I hope everyone, I know it's pretty hot around the country, so I hope people, stay cool this weekend. And we'll see everybody next week.
Bye, everybody.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh